Welcome to Digital Asset News. Predict the top stories in cryptocurrency and digital assets and break them down into bite-sized pieces. Before we get started, let's do a little housekeeping. First of all, this channel is for entertainment purposes only. Not a financial planner or a financial analyst. Just a small business owner that has a keen interest in cryptocurrencies and digital assets. Second, you do us a big favor, help us beat the YouTube algorithm by doing one of three things. Like the video if you like it. Leave a comment below about this video. It could be anything, that the video is great or the video is awful. It doesn't matter. Just make sure that it's consistent with the video that's you're watching right now. And also subscribe. Now you don't have to do all three of those things, but one of those would be greatly appreciated. So let's get into it. Today, we've got a lot of crazy stories going on. First of all, Bitcoin did $673 billion in on-chain transaction volume in 2019, which is 10 times more than Venmo. Unbelievable. XRP is getting its first real challenger in the banking industry. Chinese Bitcoin mining giant BITMAIN is reportedly eyeing major layoffs ahead of a Bitcoin halving, which is happening in May of 2020. And to round it all out, Nexo Co-Founder says Bitcoin could very easily reach $50,000 by end of 2020. And why I like this prediction, not for the price itself, but what this co-founder says. Let's get to it. So Bitcoin, a huge, massive, it was a great year, I mean, by most people's accounts. Started at 3,000 and went all the way to 14,000 at some point in the year 2019, so not too bad. Right now it's trading around 77,300. Today is January 3rd, 2020, and America did a tactical airstrike in Iran. So there's a lot of turmoil going on, a lot of indecisiveness, a lot of scared and confused parts to all of this. So what's happening is I think people are starting to look at the market and going, what's going to happen? Maybe I should put my money into something like Bitcoin or gold or whatnot. But just talking about 2019, 673 billion, that's 10x more than Venmo. If you're not from America, to all my friends who are watching this channel in Australia, and first of all, God bless you to Australia. Hopefully everything works out with those wildfires. I feel for you. Friends in India, friends in Europe. Venmo is a type of service that is very popular here as far as in America to send transactions from a user to a user that links up their bank account via a phone app. Very easy to use, just get to your bank and everything's good. And a lot of people have it. But what's amazing is that Bitcoin, the transactions were so enormous that it overshadowed even Venmo. So there is a positive sign of adoption. But moving on with this article, Bitcoin's network carried more than 673 billion in value with some stunning episodes of, god damn, 1 billion single transactions. $1 billion in single transactions. At one point, 3 Bitcoin blocks carried 8.9 billion in value in under an hour. Can you imagine moving that much money any way, shape, or form outside of Bitcoin? It would be impossible. The fees would be so enormous that you couldn't do it. I mean, definitely not with Swift. And this is from Anthony Pompliano. Bitcoin did 673 billion. That's 673 billion in a single year. That's 10x what Venmo did in 2018. It's nearly impossible to deny Bitcoin's popularity. Couldn't agree more. Goes on to say, 2019, Bitcoin established itself not as an everyday means of payment, but as a powerful tool for large-scale wealth transfer. So yeah, the narrative when I got in back in 2017 was that Bitcoin was going to overtake the world, and it was like a transaction. You can do a lot of payments. And then it kind of morphed into this thing like, well, we're not going to do payments so much, but we're going to be a store of value, kind of like gold. And I could care less. I really don't care what you want to call it, just as long as the price goes up, honestly. And we have mass adoption. So, I mean, it doesn't matter what it starts with, it's just the ending that counts. I mean, look at like Viagra. Viagra, that original purpose was for hypertension. And all of a sudden, all guys got boners. So like, hey, well, the blood pressure thing isn't working too hot, so let's market over here. And guess what? Hugely successful. Not that I'm saying that Bitcoin does any of that. Not medical advice. But I'm just saying that it doesn't matter what your original purpose was, as long as it has a use case and it solves a problem, then go right ahead. Bitcoin all the way. Great. This article goes on and says the network also suffered less congestion. leading to easily transferring hundreds of millions per day. It's one of the biggest knocks on Bitcoin. Not that it's safe, not that it's decentralized, not that it is anything else, but the problem is scalability. So the problem with scalability, it looks like they're doing things off-chain, Lightning Network, all that stuff to make these transfers possible. Not so much congestion, hopefully not so many fees. Because I can tell you, at the height of 2017, when Bitcoin went up, it was ridiculous. You would send like $100 and the price was $24 for the transaction fees. It was amazing. Huge amount of problems, but it looks like they're solving that. So fantastic for everybody. In 2019, Venmo continued on its upward track, moving more than $72 billion by the third quarter, with fourth quarter results still awaited. But this sum is also dwarfed by the achievement of Bitcoin's network. So this is my question. What does it mean by transactions? Because if Bitcoin's not used as a payment network, then like when I hear transactions, I think of Visa and MasterCard. There's a transaction. Something took place, you bought something. But in these situations, that's not what it is. So as far as I can tell, it's people buying and selling Bitcoin on exchanges or moving things from wallet to wallet, things like that. These are the types of transactions it looks like what they're talking about. Not like you go into a store and buy, Twizzlers or whatever. That's not what it is. It's just these types of transactions. So any kind of transfer of Bitcoin from one to another, wallet to wallet, that's the transactions that they, I believe, are talking about. Moving on, it says, what is more, the Bitcoin networks achieved this feat while battling significant market pressures, almost constant skepticism, and potential regulatory crackdowns. All true. We see nothing but bad news. Although on MSNBC, we did see a couple of reports that talked about how in 2021, 2022 maybe, the Bitcoin might be 250,000. So hopefully we'll see. While sending Bitcoin may be scrutinized when dealing with brokers and exchanges, the network itself is censorship-free. Unlike tokens, Bitcoin transfers cannot be censored or reversed, and this adds to the store of value narrative. So, like I said here, it is a store of value, but it's volatile. So if I lived in another country, yeah, I'd put all my money in Bitcoin. Now, hopefully, the money that I put into Bitcoin would be when it hit, went or was at like $3,000. And it went all the way up to 14,000. Hopefully, when I did my store of value, when I put my money into Bitcoin, it wasn't like when it was, I don't know, $10, $11, $12,000. Because right now, as of this morning, it's around $7,300. But regardless, it all depends on when you put it into. But if you're in a country that deals with hyperinflation, yeah, you couldn't go wrong doing it that way anyhow. Curiously, this was the interesting part. And this is the last part of the section. It says, curiously, Ripple's XRP far outpaced Bitcoin and most payment coins in the past quarter. However, the value transferred was much lower, as XRP lost around 50% of its market price in 2019. Only Bitcoin Satoshi Vision attempts to compete in terms of transaction count, though its price is roughly a tenth of Bitcoin valuation. So what it's saying here is that XRP had a boatload more transactions, but of course they weren't for that much money because, well, XRP is worth like 18, 19 cents. But so I was thinking to myself, well, how many transactions? What are we looking at? So here's a chart, bitinfocharts.com. I'm going to link it in the description below. So we've got in purple dash, which is like the very baseline. I don't know why they even have that. Green is Bitcoin Satoshi Vision, and the orange is XRP transactions. So look at this. And then of course the blue is Bitcoin, the red is Bitcoin Cash. So yeah, transaction, probably because, look, Ripple's XRP is doing a lot of different transactions as far as like cross-border remittances, especially with MoneyGram moving $100 million from one quarter to just Mexico. So I can see that. A lot of things going on, a lot of transactions, but good. All this means to me, ladies and gentlemen, is that I don't care who wins. I don't care because I have my positions. I've got Bitcoin, I've got Ethereum, I've got XRP, I have Cardano, EOS, and Chainlink, and one of these is gonna pop. And I don't care who you are or what you're into. If you're a Bitcoin maximalist, great. If you're XRP, Ethereum, whatever, I don't care. Just if I could give any advice, if I give any advice to myself a long time ago, I would just say just diversify enough to where it's not outrageous. Like, don't have 30 different coins. That's what I would tell myself. I think these 6 are a pretty good bet, and I mean, I could be wrong. I mean, it could be tomato coin. Tomato coin, you know, that's ranked 2,300 could be the next big, huge coin. I don't know. Nobody knows. So yeah, all I can say is that just remember that if you're watching this video, you're part of the 1%, or at the very minimum, you are a very early adopter as far as cryptocurrency and digital assets. Everybody outside of your echo chamber probably thinks you're a little crazy because, look, if you hear about all the negative aspects, there are all the different negative news that you hear about this space. Yeah, people are like, why even invest in this? Why even talk about this? Why? Because we both know it's going to blow up at some point. And for me, those are my 6, and that's where I'm going. All right, next up. This was interesting. It was an interesting story about banks are investing $50 million in a digital cash settlement project. And I had no idea what this was all about. This was actually an old article, May 16, 2019. And where I got this from was I did a video yesterday about Matty Greenspan. Matty, he had an idea of as to why Ripple's price kept going down, or XRP's price kept going down and down and down. And he said it was mostly because of Ripple itself. And one of those things was that the escrow that was being put out there, $1 billion, and there's another part, different parts of it. But so I reached out to him and I asked him some questions. We've been corresponding on Twitter like everybody else does. But I signed up for his newsletter, and it was pretty interesting. And one of those things, I told him, I said, hey, Matty, I go, you were spot on, because you talk about U.S. inflation, the weakening dollar, which I believe in. And I said, but besides more control by governments, how do you see these central bank digital coins being sent from one country to another, as each central bank digital coin has their own centralized blockchain, bridge currency or what? And he said, great. He goes, not sure if the bridge will be required. CBDCs allow for global settlement in real time, a serious step up from the current system. People and institutions will be able to hold the assets directly. And then from there, just kind of, he asked another question, and is it a bridge? Is XRP really a bridge? And he says, hey, hats off to the XRP community. Thanks, Twitter, conversations, da-da-da-da, right? So he sent out this tweet. Imagine a world where Europe, China, and 50 other central banks have their own digital currency that settle international payments in real time and have smart contract capabilities. Which, it's happening. It's going to happen. I mean, 2020 is going to be the year when central bank digital coins are going to be rolled out across the board. We already know China's got one, the yuan. That's going to be out in the first quarter, we assume. And then after that, the dominoes will fall. Because what China does, as it is a world power, you're going to see it push the hands of other countries, especially the United States. And that's why I think a lot of that legislation is going to go into effect. In 2020, there was 21 bills in the docket that is supposed to be looked at by Congress to be either approved or deny as far as they vote on. So I think this is the year as far as regulation for sure. Anyhow, but moving forward, he talks about how he wasn't prepared for all the XRP to come out in force, and they do, man. If you look, XRP community is one of the most vocal, the most active out there. They will tell you why they love it and what's going on. Now, if you're a Bitcoin maximalist, some of them get into heated discussions. I don't understand why. I mean, I think everybody that there's room for two. I mean, come on. It's not like, look, Bitcoin can't do everything for everybody. It is not the Swiss Army knife of everything. I mean, can Bitcoin do microtransaction payments? Can Bitcoin be a store of value? Can Bitcoin do smart contracts? Can it help with the medical industry as far as storing different data? Can it do with home loans and escrow and all? Come on, just give up a little bit. Just give up an inch. Bitcoin maximalist, it's going to be all right. Let Bitcoin do its thing. I think that if you just focus on whatever it is that you're trying to do that is so great, you can do it. Just don't think that you can be everything to everybody, right? And that's how I kind of see with Bitcoin. I think Bitcoin is a great store of value. It's fantastic. Do I think we're going to be using it to buy coffee? I don't know. I don't think so, but who knows? But I can tell you this, for like cross-border payments, stuff like that, XRP. For like smart contracts, I see Ethereum or Cardano, don't know which one, but a lot of things are being built upon Ethereum. And then as far as smart contracts, intermediaries, oracles in between, that's why I like Chainlink. So yeah, I just think that's what it is. But not to get off topic, but what Matty talked about in this email, he says, At first thought, it seemed a bit preposterous to me, and he was talking about like, why would we need a bridge currency if we have central bank digital coins? He says, why would a currency that is designed to peer-to-peer settle in real time need a third party? But then I noticed one of my heroes, the only central banker who I actually respect, Mark Carney, has actually proposed this very idea back in June. And he writes, Bank of England Governor Mark Carney said that distributed ledger, TEC, or DLT, projects have the potential to unlock billions of pounds in capital and liquidity. And that might one day see closer cooperation with the central bank itself. Capital and liquidity. Before we go on, I have to have you watch this video. It is 2 minutes. Actually, it's going to be like 4 minutes. And it is Brad Garlinghouse explaining what the difference is between Ripple, XCurrent, and XRapid. And it's going to make a lot of sense as we move forward. So just listen.
When we read headlines that another bank or another big client has signed on with Ripple, what does that really mean in practice? What it means is that someone has signed up to use our technology to enable cross-border payment flows. I think what the confusion that happens in the marketplace is that our core product, kind of our flagship product, is called XCurrent, and XCurrent is solving really the messaging and settlement problem that exists in the financial system today. Humorously, frankly, I point out to people that if the three of us decided we needed to get $10,000 or 10,000 pounds to London today, the fastest way for us to do that is to go buy a ticket, EWR or JFK, and fly it there. And that's just a fact. Obviously, that seems crazy in a world of the internet. I can stream video from the space station. So what that XCurrent is enabling is real-time messaging, real-time settlement between banks. The confusion that I think people are like, well, wait a minute, how's XRP fit? XRP is used in our second product called XRapid. XRapid is solving a liquidity problem. So it's the messaging is, I have an existing pool of capital between the Bank of Andy and the Bank of Dan. You're using big bank, very successful bank.
Bank of Dan is a good one. Yeah.
Bank of Dan. Andy's bank, a lot of compliance issues.
Oh.
These two banks are using XCurrent to settle fiat. A key point here. What happens though is you decide you want to settle with the Bank of Brad. The Bank of Brad is in Argentina and we're using pesos. You don't want to pre-fund pesos in my bank. Now, part of that is because that requires an outlay of capital, and that's dormant capital. Part of that is because you now have a compliance check that you're doing annually and quarterly. There's cost associated with that. And if it's the Argentinian peso, you have an inflation problem. So you put $100,000 US worth of, or probably $100 million worth of US dollars there that is now going to be worth less over time. What XRapid allows you to do is to have real-time liquidity. The Bank of Andy can sell a dollar, buy XRP. That XRP can then be moved to an Argentinian digital asset exchange. You can sell the XRP and buy an Argentinian peso, and now you have good liquid funds in less than 10 seconds in another market.
Now I want to make sure that we define.
Okay, so that is the big difference between XCurrent and XRapid. So for me as a small business owner, liquidity is huge. If I can have liquidity in my business, I can do a lot more things. So if I'm a bank, let's just say I'm a bank, and I'm like, okay, I want to go to Argentina. I have to pre-fund, like you said, $100 million and just let it sit there. So hopefully a customer comes in and hopefully that we transfer money. But what happens during that time when that money is just sitting there in these nostro vostro accounts? Well, that's money that I have to give up and just let kind of ride and rot out there. And who knows how much that denomination is going to go up or down. So when you have something like this, it gives you liquidity, things work out pretty well. I also give this other example is that I also sell products on Amazon. If I can tell my distributor in China, look, I need you to send me 1,000 of those units, whatever I'm buying this month, and I'm not gonna pay you right off the bat. All I want you to do is just to send them to Amazon. They're gonna do a labeling. Once they sell, then I will pay you, but I'm not gonna pay you before. And they're like, yeah, great, that will never happen, right? But if I had liquidity, essentially, and I had this kind of clout, I could do it. Now it's a kind of a weak example, but that's kind of like how it is with these banks moving forward. Now, the next question for a lot of people ask me is they say, and especially in the comments, they say, well, why don't they just use XRP or XRapid and ODL, on-demand liquidity? Why do they got to bring these banks in with XCurrent? Because banks are just like us. they're like, I don't know about this new thing. I don't want to try something new. I kind of know what what Swift does as far as like cross-border payments, but cryptocurrency, isn't that for Silk Road? Isn't that for the cartel and drug money and terrorism? I don't want to be part of that. But the other thing at Xcurrent, well, yeah, that sounds cool. I'll do that. So what they do is they go in there, they say, okay, we'll give you Xcurrent. It's going to save you a lot of time, and it's going to be faster, but you're not going to get the liquidity. Well, that's okay. That's okay. And then later on, what happens is they go, hey, how's that Xcurrent working out? Great. Well, guess what? Here's XRapid. Nah, it's okay. Next week, hey, here's XRapid. Nah, it's okay. Next week, okay, I'll give it a shot, or we'll trial, or tell me who else is using that. And before you know it, that's why I call it Xcurrent is a gateway drug. On-demand liquidity is kind of like the main thing. In sales, we call it tripwire, but it doesn't matter. So there's one more part, and this is about small banks and how they're getting screwed over by big banks. I had no idea this was a thing until I watched this video, and I have to have you watch it because it's going to make a lot of sense in our next article.
For cross-border transactions is enabled through Swift. It's enabled through this correspondent banking network. And there are a very small number of banks who dominate that, and they extract billions of dollars of profit from the rest of the banks. They sit on the top. When you ask why is Jamie Dimon, saying things about, Jamie Dimon, well, actually, Citi is kind of number one, HSBC is probably number two, but JPM is way up there at the top, and they're making a lot of money from other banks. When we go talk to banks, 99.9% of banks, they're like, we want Ripple to be successful. Because I'm sick of paying these guys, and they're taking a lot of money from me that I then have to take from my customer, and why do I want to feed?
When I watch this, I'm like, I get it, I understand. So that's why there's such a problem with these smaller banks, not the big banks like JP Morgan. They could care less, they're billionaires, whatever else. But it's these small ones, these payment processors, or these payment remittance companies. They're the ones that are getting squeezed. So if they can have somebody like Ripple come in with the XRP, it makes total sense, right? And then I thought, well, how much money is really out there? How much is Swift really doing? Well, the Swift payment network handles $1.25 quadrillion. Another type of service called chips transfers $400 trillion a year, and FedWire moves $900 trillion. So do you see where we're going here? Why this is so important, that this type of cross-border remittances and payments and things like that for businesses is such a global phenomenon that needs to be captured and updated. Because Swift was built in the 1970s. That is slow. So yeah, this could be a big thing. And this is what leads me to the actual article itself. So these banks, they're investing $50 million for a digital cash settlement. It's known as the Utility Settlement Coin, or USC. That's pretty good. Was first proposed by the Swiss bank UBS Group AG and London-based technology startup Clearmatics in 2015. Just remember, it's not what they say, it's what they do. So all these times that these banks have been talking about Bitcoin and blockchain and how it's just awful and whatever else, they're all liars. Because in the background, they've all been doing these types of things. They've all been looking at this technology and going, I mean, if they really thought it was just that awful, would they really have been putting their time and effort and money into it? Don't know. Don't think so, but that's what I know. And this was around a dozen banks are investing in a new entity called Fnality, which would run the project. So this is what Matty Greenspan was saying in his email or his newsletter. This is what he was talking about. He says, because when I read this, I was like, oh, they're talking about XRP. Unlock billions of pounds in capital and liquidity, and might one day see closer cooperation with a central bank. I'm like, okay, XRP. And he says, before you get too excited, Mark was not advocating XRP. He was actually talking about a project led by UBS Bank called Utility Settlement Coin, which raised $63 million, which was the article we just took a look at. So to go into a little more depth about what this is, they raised $63 million, and digitalized fiat would be fully collateralized by cash held at central banks and is meant to solve the cash and ledger problem. Made to work with a JP Morgan coin, and it's on a private version of Ethereum. So I'm not going to read all this stuff, but I'm going to put a link below. But all I can tell you, it is the same type of system that XRP is trying to do. Here's the difference. This is made by bankers for bankers. And Matty, I think in one of his tweets, he said, was it in the email? It wasn't the email. He said, yes, we can see XRP getting traction, and they do have first mover advantage in this space. However, it does seem more likely that a coin created by bankers for banks would be favorable to most large financial institutions. And I had to think about that. And he talks about how some competitors grab their win, and they're the ones that are going to take the mantelpiece or the flag and run with it. So at first I read that, I was kind of bummed out. I was like, man, that sucks. Because, competition is competition. And yeah, maybe, if these bankers do all these things, and then other banks will pick it up and they'll want to run with it. And it'll be like, thanks XRP for doing that, but we'll take it from here. And then all that stuff just kind of crumbles down. At first I was like, it sucks. Then I thought about it and I said, holy crap. Do you know what this means? This means that all these things that we have been thinking about, as far as could this be a possibility? Because people talk about bridge currency and they kind of, we kind of get shoot off to the side, or they think it's ridiculous, or people get angry. It's legitimized. It's legitimized. Everything that we had been talking about, as far as cross-border payments and bridge currencies and central bank digital coins, it's all right here. It's all right here. It's been verified by the big banks that are going into this area. So that's the first thing that I thought. I was like, well, great. The second thing I started to think about was, okay, so with all these things that are going on, and this is happening, is XRP going to get moved aside? But then I thought about that video that we just watched, where Brad talked about, hey, look, 99.9% of the banks that we go to want us to succeed because they're sick of paying these high fees to these other banks. I sent an email, I sent a tweet to Maddie about, do banks trust other banks? And he came back to me and he said, you know what? Banks are in the business of trusting each other, and that's how it all works. And I was thinking to myself, is that true? I mean, seriously, is that true? So not to get ahead of myself as far as the trust issue, but I'm thinking to myself, they've been doing this since 2015, and they really haven't gotten too far. There's been different issues there's been performance issues as far as when they tested it out. And then I started to think about, well, this first mover advantage. I started thinking about technology, disruptive technology. And I thought, why couldn't taxis bring back business with an app like Uber or Lyft? Why couldn't Blockbuster bring back customers with a streaming service like Netflix or Amazon Prime? Why couldn't they do this? And well, is this the same thing that's going to happen with this USC coin and central banks? And I got to say, yeah. I don't feel that banks are incredibly innovative, and it seems like once you get out in front and you're kind of at that forefront of the technology and you're the leader like XRP is and Ripple, I feel that it's kind of like no looking back, because the same thing could have happened with taxes and Blockbuster. Why didn't they capture back their business? They didn't do it because they were too slow and they were too old and they couldn't make these corrections. I think that's exactly what's going to happen here. So another thing about trust is, look, I don't like banks. Do you like banks? Doubtful. If you're listening to this video right now, if you've worked in any industry for any amount of time, you may like the people that you compete with. If they're in a different business or a different company that you're directly competing with. But when it all comes down to it, as far as business-wise, I don't think people trust each other as much as they let on. I don't trust people because I was a director of therapy services for a home health agency. And I would get along with the other agencies, but I didn't trust them as far as I could throw them because there was just a lot of backstabbing. And I think if that happens in the health industry, what the heck's going on in the banking industry? So as far as trusting banks are fraught with scandal. You get your Wells Fargo scandal, billions of dollars lost there. The JP Morgan Chase scandal, the Deutsche Bank, ING, 900 million for phony spent laundering. Then you had that huge one with Bank of America to pay $16.65 billion in judgment for this financial crisis. So if you're going to tell me that banks they trust each other and they're trustworthy, just get out of here. I think that's a ridiculous statement. I'll just say that. So I can see this though. I can see this. Just like how the taxis couldn't compete with Uber, but then what happened with Uber, they had Lyft right on their heels. So now it's kind of like Uber and Lyft. Most people use Uber, a little bit of Lyft. And then with Blockbuster, they went down, and then Netflix came and just crushed everybody. And now you see the other types of streaming services, like you'll have Amazon Prime and the new one, Disney+. And I think with cross-border payments, I think you're going to see XRP and Ripple rise to the top. But you can't just have one person or one entity at the very top. I think there always has to be two or three or competition. And if you don't have any competition, it means that there's not enough business in that particular market. So I think these guys coming in, it's a banker's coin built by bankers. I think they could be that second entity right behind or far behind, I don't know, XRP. And then I started to think about it. Well, what about cross-border payments? Well, that little interesting tidbit I showed you, remember Swift? Swift is by far the biggest. They move 1.25 quadrillion. But chips and Fedwire, 900 trillion and 400 trillion respectively. I think if you can split that between XRP and this USC coin, sure, whatever. But we'll see how it all lays out. Next up, Bitcoin reportedly eyeing major layoffs ahead of Bitcoin halving. This I kind of saw coming, and I feel bad for all the miners or people who are working for BITMAIN. But BITMAIN, if you guys don't know, is a major Chinese mining company in China, and it's going to lay off another 50% of its staff ahead of May's Bitcoin halving. BITMAIN had launched a personal optimization plan, or as we call it, layoffs, to lay off a significant portion of its workforce ahead of the next Bitcoin halving. Layoffs are expected to occur before January 17th. Golly, it's like in 2 weeks. So the Bitcoin's halving event, if you don't know, it'll cut the total block reward from 12.5 Bitcoin to 6.25 Bitcoin per block. And I always like to say it like this: if it's going to happen in May 2020, imagine working May 30th, and then your boss comes to you and goes, "Hey, Jerry, Johnny, Jimmy, whatever. Good job sweeping these floors, but tomorrow I need you to do the same thing, same effort, same work, everything else. But I can only pay you half. So see you tomorrow, great job." That's essentially what's happening with the miners. It's the same output, the same effort, the same money and electricity. They're going to have the reward. So if you have something like that, you're going to have to lay off some people, and that sucks. But this is what was most interesting. BITMAIN has a history of massive layoffs. In 2018, the company cut ties with roughly half of its employees. And they said, "Hey, sorry, we're trying to cut down, trying to cut costs, and we got to let you go." So I wonder, my question is this: BITMAIN cannot maintain the current output, but is this good news for small farms or even individual miners who are small enough to be nimble and quick and able to upgrade all of their mining rigs and not eat the farm? So I don't know. It'd be interesting to see, but I can tell you this: that hash rate may go down with all these people that are getting laid off, or maybe it'll go up because you got to do the same amount of work for half the reward. We will see after May 2020. Last up, Nexo Co-Founder says Bitcoin could very easily reach 50 grand by end of 2020. So this is from today, January 3rd. ANtony Trenchev, a co-founder of crypto startup Nexo, said during an interview at Bloomberg TV's Bloomberg Markets, the price of Bitcoin could very easily reach 50K by the end of the year. And he states, "I think that very easily we could see Bitcoin going up to 50 grand by the end of the year. We have our analysts at Nexo crunching the numbers, doing very substantial research. It's the halving coming up because, miners are dropping. Last time this happened, Bitcoin rallied 4,000%, and it's been an incredible asset. Uncorrelated to the overall market, it delivers systematic or asymmetrical returns." And I will say this though: ever since the U.S.-led Iran strike that killed one of the leading Iranian generals, the price of Bitcoin it jumped like 6%. Also, gold went up. So to say it's uncorrelated to the type of market, I don't think there was a dip in the S&P, but when there is economic turmoil or some type of uncertainty, it seems like Bitcoin and gold go up. So we'll see. He was later asked why Bitcoin not become established as a method of payment. He said it's a good question. The initial idea was we're going to pay for coffee, but that didn't happen. Narrative now it's that Bitcoin's a new gold. And if Bitcoin is new gold and it just captured like 10% of the total market cap, that'll be like 50 grand of Bitcoin. So I'm like, okay, that makes sense. As time goes on, maybe Bitcoin starts to eat into the gold, which I think Peter Schiff would be very upset about. But then I thought to myself, well, how much gold is out there in the world? So you might have seen this before. I'm going to link this in the description below. But this is money as far as like the entire world money that is out there. So you can see right here, this little blip, this is Bitcoin. This actually was made in 2015. So right now Bitcoin is about 130 billion. So it'd probably be like a little bit bigger than this large square, because each square represents 100 billion. So let's just scroll down. Silver, very small sliver. Warren Buffett, Bill Gates, Carlos Slim, richest men in the world, they got like 80 billion, 100 billion. ExxonMobil, Apple, the Fed's balance sheet, that's a lot. Commercial real estate, 7.6 trillion. And then here's gold, 7.8 trillion. 17% is held by the International Money Fund and central banks. So 7.8 trillion, if you can get Bitcoin in there at 10%, you're looking at 780 billion, which was pretty much the height at 2017. I think it was 840 billion, but it doesn't matter. So if you have that, plus investor FOMO, plus institutions coming in, yeah, I think you could do that. I think Bitcoin could hit 50K in 2020, but we will see. Not for sure. And then talks about narrow money, all stock markets, broad money, global debt. Look at this nonsense. And there's a thing called derivatives. This is where we're going to leave the story. But I want to say thanks for watching. If you could do us a favor, just like the video, comment, share. And if you really like it, give us a follow. We got more videos just like this. But that's it for today. I want to say thanks for sticking through me for the rants, and I will see you on the next video.